Okay, today is Friday, the 24th of February, 2023. The personal consumption expenditures report did come out today. And guys, it is not good. Unfortunately, both the headline and the core reading coming in at 0.6% month over month. And I just don't understand. So we're going to take a look at a couple of items here. And also, I'm going to give you a little bit of insight of what some of the builders are doing in order to get their home sold that you should be aware of, because it's something that you can do as well. So let's jump in here, take a look at that and what is going on. So let's see here. If we jump over to the PCE readings here, this is again from the Bureau of Economic Analysis, the personal consumption expenditures for the reading of January that we just talked about. Now this is showing the core reading, which excludes food and energy, coming in at 0.6. Now let's jump over to our interactive chart that we like to use over here. Now again, we were at 0.3. Now here's something else that happened, is that they had an adjustment to the December numbers that brought this rounding to where it rounded up to 0.4. Okay, so we got to do that first. Again, bad news there as well. But January came in at 0.6. This is bringing us to 4.7% on the year over year number. Now, guys, I don't know about you, but I do not think that I'm experiencing inflation out in the general economy. And when I'm spending money going around, the inflation is just not as shocking as it was maybe in the summertime. So let's take a look and see where was inflation in the summertime. If we go back to our chart here and we look at the months of, what do we got here? August, September, October, July, June, 6.165. Okay, these are high numbers, 0.6, 0.6. Now we're coming in at a 0.6 in January. I don't get it. So do you think, and I'm asking you to think about this in your own mind, do you think that inflation, okay, not that, I'm not saying are things not expensive, but do you see them going up the way that you were during the summertime? Cost of vehicles, even cost of houses. Now, again, remember, you're probably thinking, well, I remember gas was expensive. And I also remember that food is going crazy, and eggs, man, they go up $1 a day. We're excluding food and energy. Excluding food and energy, they still believe that inflation is as high or higher than it was during the peak months of the summer of 2022. I don't understand it. I don't buy it. But Barry Habib, someone that I listen to every day, was speaking with, apparently, was speaking with Lacey Hunt, and he made a good point. He said that the month of January is a strange month because there's a lot of kind of adjustment. Okay, so there's seasonal adjustments and things like that that we won't get into, but an example was like healthcare. Because if you go into your new year for healthcare and maybe your healthcare increased by 8 or 10%, like it really seems to do every year, that pushes up the prices and they begin to be seen in the month of January, because maybe that's when the calendar year is the rollover and when it goes into effect. The other thing is when it comes to housing. Now, again, the core reading does not include food and energy, but it does include housing, shelter, that's rent, mortgages, things like that. And let's take a look and think back to the summer months when interest rates were continuing to really get high and kind of peak out in August. Well, that was the interest rates going up, monthly payments going up, rents were going up. Really, rents are still going up. But those really high payments started to level off, right? Because interest rates began to level off, home prices began to level off. But the payments don't start on those houses for 30 to 60 days after that time frame. So now, again, it seems like the prices were going up on mortgages, and then the PCE report is kind of behind it, trying to catch up to where it's leveling off. And that may be why we're seeing the personal consumption expenditure coming in higher than what we're seeing around us. But it still is very suspect. I thought it was also interesting, if you want to take a look here, you can pull up the personal consumption expenditures report at the Bureau of Economic Analysis, and it breaks down. We talk about often that the PCE reading or the CPI reading, personal consumption expenditures, and the consumer price index are a basket of goods that we're pricing out on a month-to-month basis and determining whether the costs are higher or lower than they were the previous month. That is how we gauge inflation. We add the month over month together to create our year over year annual appreciation. Okay, so what's kind of cool, you can go in and you can look at the actual items that are within that basket. So look at all these items that they're looking at, right? So I can go in and I can break this down. I can show it in charts, but I thought it was really funny as I was going through this today, kind of analyzing this information. Take a look at this line item: gambling, casinos, lotteries. Isn't that cool? I mean, at least they're being realistic on where people spend their money, right? I mean, you got to have a certain portion of your overall budget ready for gambling and, lotto tickets, I guess. So that was in there as well. Let's take a look and see how the markets are responding to this. Again, not a good day. Let's go over here to our market overview. We are currently, let's take a look, down 37 basis points. Not as bad as it could have been, and not as bad as it was earlier in the day. I believe at one point I saw it down about 59. So we have clawed back. Again, we always talk about a knee-jerk reaction. Things settle, and then people begin to kind of claw back one way or the other. And I'm seeing a little bit of improvement here in the end of the day, Friday, going into the weekend. We are up 8 basis points on our 10-year Treasury. And you know that I keep talking about these incremental increases in the 10-year Treasury and how it's getting closer and closer to the 4.0, which is not where we want to be. And look where we are, 3.95. Okay, here's our chart. You can see us. This is when that employment number came out. This employment number was so crazy that there's articles being written about like fraud. Like there's something wrong with the employment number that came out on this day. But it is what it is. The markets take the reading. We go down here. The CPI report comes out. Again, a pretty good CPI report, but not good enough. And we continue to drop down. And now here we are bouncing around in this range, which again, I'm pretty happy with where we're landing right now after such a hot personal consumption expenditures report. I mean, I would have never said that we were going to be at 0.6. That seems way out of line, but that's where we are. And that is what the market is going to read. And that is how they are going to react. We did kind of come up here, get above this Fibonacci level, and now kind of coming up against this as a ceiling of resistance. I don't know that we're going to get above that, especially going into the weekend. So how are home loan interest rates responding? Let's see if I still have that information up in front of us. So we're going to now pull up the Brent Bruce Daily. And before you see the numbers, let me ask you something. And remember, we're going to talk about what builders are doing in just a moment in order to work through these numbers and through these interest rates. Do you think, before I pull it up, what do you think the interest rates look like today? If you watch the Brent Bruce Daily on a daily basis, you probably have a number in your head. If we were at 6.625 yesterday, day before, where are we going to be after a personal consumption expenditures report up 0.6 month over month? Let's take a look in here and see. Again, this is a very well-qualified 30-year fixed conventional, 800 FICO score, 25% down, single-family residence, primary residence. We are at 6.75%, guys, with a little bit of a credit, $162. If I open this up here, let's take a look and see if we were to maybe pay a point. We're at about 6.375 for not very much here. For what does that say? 885. We can get down to 6.625. Now, let me make sure that I show you the parameters. And again, we're going to talk about the builders in just a minute. There's the parameters so that I am in compliance, and these are the real numbers. Don't know why anybody would pre-qualify with anyone else, because those are definitely lower than what you're seeing. Now, what I want to point out is 6.75% is not that much higher than we were yesterday. After a really bad personal consumption expenditures report, why are we only up an eighth? Well, I mentioned that I believe that we should have had better interest rates than we did at that moment. I believe I said that yesterday. But that they were buffering, not giving us the benefit of the market in preparation of the possibility of a higher than expected personal consumption expenditures reading, which is what we got. So they did bring rates up, but it didn't hurt as bad because they were kind of holding back on giving us the benefits of the market from earlier in the week. Okay, so now let's talk about, and I will be getting out the month of March's calendar. I'm going to try to actually put a document out that you'll be able to print later on. But let's talk about builders. Again, this is something that I heard from Barry Habib today on his daily report, is that there is a meeting, or there was a release or something that says that 60% of home builders mentioned that they are using a 2-1 or a 1-1 buy down. They are using the buy down product and rolling it in. You know, the builders always give these huge, credits and closing cost credits. They're taking that money and they're buying the interest rate down with a 2-1 or a 1-1 buy down. We even have a 3-1 buy down product at one of our banks. The reason I say that is because they are selling houses. I mean, how often do we hear that somebody said, oh, I just went with a builder. Oh, I just went with a builder. Oh, I just went with a builder. Not because their houses are cheap, but they can work with the numbers and offer today, if we're at 6.75% on our standard 30-year fixed conventional, a 2-1 buy down is a 4.75%. That's a really big difference on a monthly payment, especially on a $500,000-$600,000 new build. So make sure that you're reaching out to me and learning about what a 2-1 buy down is. And just a little bit of a teaser here, it is not a lower interest rate. It is not a lower interest rate. If you don't know what I'm talking about, go back and look up something a video I did on how a 2-1 buy down actually works, or give me a call. We can talk about that. And I can help your clients, and we can try to structure a transaction that works. I don't know why anyone would qualify with anyone else in the states of Tennessee or California when you're seeing what we have to offer every day. Make sure that you reach out to me. Let me know your thoughts. What do you think is going on with inflation numbers? Am I crazy? Am I not seeing it? Am I just spending too much time in this office? What's really going on out there? I do think that we still have great things to come and that we will have a very productive second quarter. We will see a very productive second quarter. So just know that, and you can definitely be excited for that time. But today was a rough one. Talk to you later.